Have you returned from the lunch? You know, already quite a few are already here. I wanted to ask you one question. Did you taste the coffee? Yes? Did you taste Kalve coffee? That is a fantastic coffee that is being served near the entrance. And do you know that they are not just brewing the best coffee, sustainable coffee and tasty coffee, but they are also stirring up an IPO sometime soon. Let's give them a big round of applause of encouragement. And there is just one coffee break still left, so you can, those who did not manage, try it out. So great to be here yet another year. And I think a lot has happened. I think all those bond issuers and also equity issuers, from Indexo to Eleving, and also those who are preparing, they also need a boost. They need an applause from you. Okay, so let's get to the business. We will discuss today again the uneasy topic about the publicly controlled companies and where are they on the Latvian capital markets. All right. We have been discussing it already the last time around, and we have made progress. I heard this progress in the speech by the finance minister. Those of you who remember the last panel discussion, do you recall that we were discussing how to boost this one myth, the privatization myth, the fear that the going to capital markets is the Soviet times, you know, post-Soviet times, old privatization. Do you remember that we discussed that today's capital markets differ from the old privatization in terms of the valuation, right? It is a real value determined by the market and not some way else. The market is the best determinator. Payment terms. The payment is made on settlement day, T+2, as bankers say. Not 10 years later when you earn the money from the company profits and repay from the company's funds. That was the old style privatization. What else we did discuss? The control, the fear of losing the control. Old style privatization, everything lost by the public sector. Today's capital markets, the public sector retains control whilst sharing the benefit of the business with the people, with the public, in order to generate the national wealth. And more we can go with good corporate governance and transparency. You remember we did that last time, and the minister said that the tone is changing, and it is actually changing, and it's thanks to our joint work. But we have more to do. And today's panel, we will focus on a couple of other myths, fears, uncertainties. And we have a fantastic panel to discuss about it. Not only fears, myths, and uncertainties, but also inspiration, best practices, and the way moving forward. Therefore, without further ado, I will start introducing the great panelists we have today. The first one is a forward-looking telecoms leader. He thinks about innovations, he does exports, and he also is a fan of open office working. Furthermore, he knows how to put a puck into the net. That's the golf move, but I think, the hockey move. So welcome with a round of applause, Uldis Tatarčuks, CEO of TET. You're still doing hockey?
Yeah, I am.
Please.
Thank you.
The next speaker, he's from the business community, high-level CEO, and also ambassador of good corporate governance practices, both from his previous experiences and the today's business. I also found a quote of him saying, "Better plant a tree 10 years ago, but the next best possibility is today." Welcome with a round of applause, Māris Ozoliņš, CEO of Rīgas Namu Pārvaldnieks. Riga House Management Company, is that more or less correct in English? Riga House Management Company?
We don't translate, but don't worry, I will explain.
Okay. The next speaker is a fantastic lady, a real opinion leader. She is trending very well on mentions. But my sources tell that she is also a great internal idea leader in the Big Four company where she is partner. So she has introduced the Latvian Diversity Act or policy. Welcome on the screen, on this stage, Evija Šturca, KPMG partner. Welcome, Evija. Was I correct about this diversity charter? Charter, not act, not policy, but charter. And last, but definitely not least, a lawyer with legal education, I believe. So, and he has been shaping and developing and facilitating capital markets matters and developments from Europe to Turkey, you name it. He represents an organization which is an anchor, a desired anchor investor in like any business. So very much looked after investor who has loads of experience to share with us. Welcome on the stage, Tomas Kairys, EBRD. You're the head of Baltics.
Thank you very much.
Greetings. What a fantastic panel discussion. Okay, we then need to get down to the business. I would like to start. Okay, something is already on the screen. It's quite complicated business. But why I want to warn you. We are now going to do a deeper dive. Because you remember, we need to understand and jointly discuss which are those instances, those road bumps, some barriers, which result in Latvian capital markets not being populated with municipality and state-controlled companies who have caused our great Lithuanian friends and Estonian friends trending so much better on the percentage. I am a lawyer, and we are on my table this particular issue, which may not be well known to most of you, is like for the last year on weekly basis. And how to put it more, I would say so that as easy as possible. Imagine a chest of great assets. And imagine the owner of the chest not using the assets entirely for his or her own benefit, and at the same time also not investing it further, not giving the assets, not employing them. And this owner is basically, to some extent, our state with the tools, the laws that we have. And I will make this example more legal now. We have a regulation in Latvia, in the state governance law, which tells that state and municipality controlled companies basically can be founded with the purpose, one of the three purposes. One, market deficiency. Yes, they can do some kind of business to fill a market gap, a market deficiency. The other one is they can do a service or produce goods in order, of a strategic nature, or to manage strategic assets, whatever it sometimes means. Those three instances, a state and municipality fully controlled company can only do. And our competition council has even further extended the interpretation of this concept, not just to the establishment of the company, but to the entire operation of this company. And now imagine this company basically going to the capital markets and writing in prospectus and telling, by the way, we can only do one of those three things, and investors, are not they looking for something more? Let's discuss it a little bit. We have Māris here on stage. You are from fully controlled, fully owned Riga city municipality company. What I just told, is it something, virtual, or is it something real, based on your experience?
Mm-hmm. Okay, thank you. So let me start by introducing who we are, and let's start by purpose. You mentioned there are three purposes.
Yeah.
We just recently redefined our purpose, and we said that our purpose is to improve quality of life of our customers. And now I'm thinking, this does not fit into those three. And any lawyer would say, this is not, not the purpose that has to be served by a municipality-owned company. About the name, you asked how to translate. Yes, Rīgas Namu Pārvaldnieks, very good name. 21 character, some capital letters, some special characters. Actually, very good name, safe to use as your password.
Yeah.
And if you are using
Take a
that,
note.
don't do it anymore, because after that everyone will know. But yeah, but of course it doesn't help us to do better business, to go internationally, and even to explain to investors who we are, even by saying our name. So of course we are on the way to doing some rebranding, and that we will do as much as the same as many other things. Now coming back to your question about do we fit? Again, we are the largest in the Baltics residential building management company, and we manage about 3,500 multi-apartment buildings in Riga, right now only in Riga. We have 2,000 employees, we have 150,000 customers, and we could do much, much, much more if we would not be bound by those, how to say, rules or regulations. So, therefore, we have a plan, and it's very secret, but because my lawyer is not so nasty as for some other companies, I can still tell, maybe they will become. Yeah, we have a plan. In 2026, we want to launch IPO. We want to launch IPO because it is needed, because we can do much more. And of course, Riga municipality is their decision, it's not our decision. We will only propose, and we hope that the elected members will vote for it. So we are now preparing for it, and we believe that this will give win-win-win for everyone, because first of all, some of our customers, not some, but many of our customers could become our clients, and as we are working with very stable, predictable revenue today, growing revenue, good profit, we are paying good dividends. We paid 80% this year to Riga municipality, so they can earn from dividends, and they can also influence how the company works. And also, it will be great for company because of reputation and because of possibility to do more, to invest in many other areas. It will be good for Riga City Council, who will retain some ownership, and the value of company will grow. As a result, they will get some payment for dividends, and then also better or more valued company. And it will be good for society as such, I think, because we will contribute to this thing that everybody is talking about, but nothing is really happening, which is how to make so that the municipality or state-owned companies are going to stock exchange and help to grow the capital markets in Latvia. So I think it's win-win-win-win-win, 5 wins. Who can resist?
Exactly, and a little follow-up. So has this regulation at the moment impacted or stopped any innovation which you, let's say, have planned? Because innovation development is it goes hand in hand with capital markets, with business case. Has this stopped anything?
Yes, it has, because there are many things that we are not allowed to do, or let's say, I'm not whining, let's say the other way around. When we are here, when we are free to go, we could do much more, both horizontally and vertically. We could expand by regions, and even in other countries. We can also offer some new services. And for example, talking about innovations, we were working on a project about smart meters to be installed, so that the people will save time, and then it will be more accurate. But some things are not allowing us to do so. So basically, yes, but I would also like to mention that there are more things coming now on the table, just being discussed, that I am afraid will even more how to say, prevent innovation.
So this IPO is one of the, let's say, having a private investor in your company basically unlocks your potential. This is what you are saying.
Yes.
Additionally.
Yes.
Thank you. Thank you. So you see, it's not a myth, it's a reality, this problem which we are having at the moment in Latvia. Uldis, your company, do you know what we are talking about here, this Article 88 of this law, or you do not read that one?
Oh, of course we are reading and we are following, and actually at the moment there is a discussion in Latvia's Employers Confederation we are participating in. It's not impacting us directly, because we are not like state-owned company. We are fully commercial company operating with innovation, with whatnot. In a lot of cases sounds just like you, but the thing is that majority of shares of our company is owned by state, which is okay.
Yes. So you are state-controlled to some extent. Yeah.
We are, yes, in that aspect, yes. But our main target is to grow the value of the company, value of the capital we are running, and grow the business results. So that's a normal situation. However, at the same time, it's not so simple like on a picture. There is another aspect from government, and this unclear regulation from our perspective corrupts normal competition, because sometimes inside those regulations, state decides to delegate some kind of functions to the companies they own 100%, which creates a problem actually. They are getting worse service, overpaying for the service, and actually by this 88 punts, they are killing competition in some industries, which is not good from our perspective.
And I have heard about those kind of horror stories from smaller businesses, be it, let's say, in security services area, maybe it is healthcare area. But the problem, dear colleagues, is that at the moment, this regulation, by the way, it set in year 2015 as a result of little political power play, and it went applicable to every state and municipal company, irrespective of its nature, yes, irrespective of its goal, irrespective of its strategic purpose. And therefore, I know that, Thomas, you are probably sitting and thinking, what are they talking about here? I don't know. So just a little bit still more insight, what is happening at the moment, let's say, to try to deal with this problem that every state and municipal company is being treated from these restrictions perspective absolutely equally, meaning nobody can do nothing, right? So in terms of development, there are some hopeful, parliamentary and government initiatives. One of them you see on the screen, to basically categorize the companies by their purpose. Let's say solely commercial, semi-commercial, financed by certain state resources, and like this social function, which might be, culture, recreation, welfare services. But at the moment, this split is only introduced to regulate what? Fixing of the salaries. And we think that, let's say, if at least this first step of categorizing is done correctly, we should move on with reasonable further regulation to allow the commercial companies already to do business on fair competition terms. Now, Tomas, having heard, the outline of the problem, is this anything you have heard across the Baltic states when you are investing, or maybe somewhere in the wider Europe? Has that been on your radars that we are discussing here?
Let's move on with dealing with this problem. It's a problem, it's a technicality on one hand, it's not simple, but it has to be dealt with because we are forgetting the big picture. The big picture is capital markets is a source of funding for the companies like these.
Yeah.
Size matters. Latvia is a relatively big country, but not necessarily very big, right?
Not the biggest.
For the issuers, we need size. For the investors, especially institutional and international investors who would bring money and know-how, we need size. Yeah. How do we achieve size? Deepen, broaden capital markets, and of course, think a little bit, as Karel loves to say, pan-Baltic at least. We're moving there. We look at our neighbors across the two borders, south and north. We have already one company in Lithuania, right, Ignitis, a very successful IPO. We have two companies in Estonia, Port of Tallinn, as well as Enefit Green. Have you heard the number of investors, retail investors that actually participated in the IPO of Enefit Green? We're talking tens and tens of thousands. So that's the big, that's why we're doing it, right, at the end of the day. So whatever the technicalities, whatever the issues are, let's move on. There are examples. Baltics. Besides IPOs, we also have, let's not forget, debt capital markets for the SOEs as well. There are good examples. There are good examples in Latvia. Latvian Energo has issued a green bond. AST has issued a green bond. You look at Estonia, ST Energia has just issued an interesting instrument, hybrid bond. Lithuanian side as well, you know, EPSO-G issuing. Look at the type of companies that we are talking. These are the companies that are sizable, that can bring a change into the market, right? So for EBRD, it's very, very simple. We look at it from a slightly bigger perspective. We, the bank, we want to make money. We are development bank. We want to create a change. What do we do with that? We do policy dialogue, and we do technical assistance to potentially deal with issues like this. So it's not just that. There are a number of elements to it. We talked about the index, Pan-Baltic index. EBRD participated, very interesting development. We're talking about a pre-IPO fund that Altum and Lithuanian Ilta was going to talk later about. We're pushing that. We're talking about new instruments, covered bonds. This is a big development. We are now working with the municipalities across Central Eastern Europe, or governments rather, to actually persuade them to open up municipal green and sustainably linked bonds. Let's start with debt, and then let's move on to IPO. The rule and the route is very, very clear. We just need to get on with it.
Very relevant. Thank you so much. And also for the, especially close to our heart is your activities related to the Capital Markets Development Accelerator Fund and the SMEs listing support instrument. Thank you. But just to follow up, so you, with your commercial hat on, are you looking for the company where you're investing on their business model, on their investment plans, on their R&D, on their growth strategy?
Of course.
Of course. Yeah.
From my perspective, we're talking about state-owned companies. These are the pools that are lying there that need to be unleashed, right?
Yeah.
Let's look at the statistics, just to give you an example, because it's not just the Baltics, it's actually Central Eastern Europe, right? So, example, Croatia. Croatian Telecom went into IPO. It served as an amazing example. Immediately after, 5 private sector companies followed up with an IPO example. Do you know that statistically, listed SOEs represent largest capital market companies, listed companies, in 7 out of 10 non-US capital markets, largest, including Germany and France.
Yeah.
It's not a question. We need to move on with it. So I understand it. There are certain issues from the government perspective as to why not. There were considerations that you so nicely described in the beginning, but it's very simple. It's besides the point whether this is old-fashioned or modern way. The issue is very simple. What is the consideration? The government partially privatizes. It's a route to full privatization if it makes sense.
Yeah.
The government can look at something else. The government can think, you know, we want to validate and see whether the value that we're giving into this company with the partial pre-IPO makes sense, right? Or we want to commercialize a company when it needs to be commercialized. All of this can be done through.
Exactly, and we need to move on, and that is so important. And the biggest problem is that this regulation based on Olma is rooted in fear. We need to get rid of the fear of the state controlled companies being unfair competitive partner to private businesses. So, Evija, you are obviously independent consultant. Just to a little bit wrap up this first one on this regulation, what is your observations and take on that?
We are looking for IPOs, so we need to look for growth stories because the investors need the growth story. And we often, we need to remind also to the state-owned companies that first it's about defining, finding ambition and defining growth objectives, and then for this growth strategy, you just need to define the financing structure, and IPO is a tool to finance the growth strategy. But in reality, we see that there are different levels of ambitions, at least among Latvian state-owned companies. And I'm very glad to sit on the same stage with municipality-owned company that we just heard has great ambitions to grow, which need to be solved still by the regulation, so that allows the growth. But we have, as part of our experience in working with the state-owned and municipality companies, we have also come across a number of companies where the management board want to stay in the safe space, to have moderate ambition, moderate growth goals, and that definitely limits the potential for IPO. And I think we have seen good examples already where the supervisory board has been in the right time to challenge the companies to actually set higher ambition and to set higher growth objectives. And we hope that the supervisory board element will also help to get to more growth stories and IPOs.
Because supervisory board sometimes pushes, actually, isn't it right?
Yes, they push the management. They push also for a more structured strategy process that includes both internal resources, like more structured strategic discussions with management and employees. It also pushes for more in-depth studies of trends into the sector, into the technology developments, and those are the ideas where the growth opportunities can be identified. So I really hope that our state-owned enterprises and municipality-owned enterprises will have the ambitions that will drive the IPOs.
Because this ambition and boldness and willingness is so integral. And we also, to the extent reasonably possible, as a lawyer, I have to say from the state perspective, and dear policy makers in this room and watching us on Delphi, it is so important to leverage that regulation which allows state and municipality fully controlled companies to do innovation, to do exports, to open new markets, provided that they ensure competition neutrality, meaning they do not have unfair competitive advantage, they do not use the state funding at an unfair competition advantage to the private sector, and that they really compete equally. And if they don't, the Competition Council will fiercely punish them. And that is the right way how it should work. And in that way, I think, we can further move on. Because also for those viewers in Estonia and Lithuania, we know all this discussion was a little bit like, what are they talking about? But that is a good lesson. And I think, Tomas, can I a little bit divulge what we discussed yesterday at the table? It was so interesting when we discussed that in Estonia, the state would be the least one to jump on regulating, let's say, the private sector to the extent possible. They would stay away. There was an opinion that Lithuanian state would like to regulate, but the businesses do not want. They do not trust that the state will actually regulate. They will do themselves. Now, Latvian business mentality is a little bit to state that the state has to regulate, and the state sometimes does regulate and over-regulates. Well, Tomas, based on your experience, is that true, or that's just, that is a feeling?
I think you summarized our discussion quite well. I'm sure we can spend a lot of time comparing
Yeah.
all the local differences as to how we approach it. I would look at facts,
Yeah.
and where the facts speak for themselves.
Yeah.
When is Latvia going finally put SOEs to partial privatization? That's my question. And what is the missing point? You Latvians probably want to answer that yourselves. From our perspective, players like EBRD are there to anchor. Players like EBRD are there to help with potentially some technical assistance and policy support. But from my perspective, we just need to move on. Sometimes one spends a lot of time trying to methodologically approach all of it. When you talk to the market professionals and participants, I think it's quite clear we have a certain number of potential companies, and it's quite clear that, you know, it's almost obvious, depending on market circumstances and a situation, you know, with the specifics of the company, you can move on with them. It's very clear.
Yeah.
The company needs to have a plan. The plan has to be ambitious, the plan has to be realistic, and then as an investor, you look at it. Is it a growth? Is it dividend? What's the long term? We will move on with it. This company, when it gets the money, then it will innovate, then it will invest. So we are talking here about capital markets. Let's help capital markets grow. The companies will use this capital markets as an impetus for them to become even more competitive.
Exactly. So, capital markets and broader shareholders base. So we have just discussed that. In your case, a broader shareholders base would basically be an answer to your unlocking the development potential.
Yes, and not only that, because right now we already are operating like a normal private commercial enterprise.
Yeah.
We are competing with other. We are not subsidized. We are working with profit. And we are actually competing
You would
for
say
our
you are
customers.
fully commercial, yes?
Yes, de facto we are fully commercial, except that we are owned by municipality, and as such, for example, we have to adhere to public procurement law, which actually I don't know how and why and when it was written, but definitely what we see, and with my background coming from private business, it helps us to buy more expensive, longer, and worse quality. So if that was a name, it was reached perfectly. But otherwise, how can we compete with others who don't have to adhere to this law? Of course, that makes us, in a way, very restricted, and that we see one of
public procurement. Yes, I can just. At one point, I really understood the essence of the public procurement. Not reading all these, it is basically for the proper use of the state and public funding.
Absolutely.
But when it comes to the use of commercial funding, the commercial assets, let the market decide and let the market punish if you procure wrongly. So that is the underlying concept. And if we think from the substance, not from the just regulations and regulations, so this is what we should embed. But moving on, Uldis, you are on the hot seat. I see in letter, Ted says this, Ted says that about. You have not so, I would say, you have very respectable, but not the easiest shareholders base. How would you say? I mean, if the shareholders, your current shareholders, I mean the state and the private investor from Sweden, very respectable, if they cannot agree, what happens?
Well, then there is a challenge, like in any other case, when your shareholders don't agree about the one strategic direction, then you have a challenge. And
Yeah.
It's a bit more complicated life for management board, but I do believe that both our shareholders understand the value of company, how they understand our strategy, and it was very strange for me to hear that supervisory council is not challenging. Yeah, I would like to work for such a company because we do have enough challenge, we do have enough ambition for growth, and I do believe that all discussions can be settled and find a positive solution for our company to grow further.
With Evia, we saw that the supervisory board actually is sometimes challenging the management board to go.
In our case, always.
Is always, okay, so you are in the hot seat, really. But, okay, so we all know these, let's say, the current challenges, but in your, as management's view, would capital markets for TET in one form or another be a vision for the future?
Absolutely, yes. We are evaluating all available options. We have plans for bigger investments. We just started our new data center construction in Salaspils. We have other plans for DC growth and IT growth, so definitely we will need funds. We plan to invest more in next 3 years, so if you can demonstrate a profitable and growing business model, then the investment is interested in you. And therefore we see it as an option, maybe not in next week, but in some 2, 3, 5 years period.
And it's so important, again, to reiterate, when we talk about listing state-controlled or municipality-controlled companies, it is not for the sake of going into the stock exchange. It only makes sense when it aligns with the short-term, medium-term, and long-term development goals of the relevant company. Would you concur?
Absolutely, because when we are talking about state-owned enterprises, it's hard to speak about them in one sentence, because there is Dailas Theatre, and there is Latvia Energo, and there is Rīgas Namu Pārvaldnieks, and there is other companies, because you need a solution for a business, not for something very, very general, because investors invest in companies, in specific companies, not like in all state-owned companies together, which includes theaters, hospitals, and state forests, and something else. So you have to
and hence this classification may make some sense, actually.
It can bring some clarity, because I have an interesting challenge in my head, how we will compete with how the fully commercial companies will fairly compete with some kind of partly commercial, partly something else companies. How we will define that?
Let's move on. We have discussed the challenges. And I really, yes, it was a bit legalistic topic, but it was so important to voice it in this conference, because the government is working on this problem at the moment, and it needs the right direction. And we really very much hope that the next Capital Markets Conference, we are already not touching this issue anymore. It is like a hidden issue. Most of you probably are not even aware of it, but this is one of those hidden issues. And since we were doing a deeper dive, we needed to bring it out to the light today. So, let's assume we have dealt with these and other issues. Now we have the road, state and municipality-controlled companies' road to the capital markets. Evija, you have done great work on similar matters. What would be your, let's say, advice, an executive summary that you could convey to our audience, let's say, the recommendations related to the readiness of the company?
I still think it definitely is important to get the strategic goals and the ambition right. But secondly, as Māris is asking, secondly, the company also needs to get ready internally, and it needs to ensure that it is IPO-ready company from internal systems and processes perspectives in the area of governance, in the area of financial reporting, in the area of risk management, internal controls, and those areas need to be compliant with the regulations, with the standards, and also the stock exchange expectations, the investors' expectations. The company needs to have investors' relations area functioning. And as we are talking also about unlocking value, then I think even though to a smaller extent, but also having a well-run company, it also unlocks some potential value from the internal processes in addition to the achievement of the overall strategy. So that is part of the homework for getting ready, but also the internal household needs to be in line with the expectations of the stock exchange, and it's just the best practice what is expected by the stock exchange.
Thank you, Evia. And Tomas, maybe your reflection as a strategic, basically as an anchor investor, how you say when a company is ready, you know, so especially if you're looking at when did you understand that Ignitis is ready for your investment, Enefit Green ready for your investment. I think you also have a stake in Port of Tallinn, am I correct? Yes, so please share.
You know, of course, there's a number of lists that any banker would look. So I would not say that SOE would have some crazy different, completely different approach to any other IPO that will look. So that's first. However, there are a few elements that we see are important when it comes to municipal and state sector. So first of all, the majority shareholder has to very clearly position and communicate what it's going to do vis-a-vis that company, what its role going to be in that company, what's the strategy, what level of decision-making they plan to be involved in. Then management, the preparedness of management, we always talk about corporate governance. It's a nice big subject. The reality of it, you have to have a very clear plan, and the management also has to actually deliver on the promises given on the IPO. So it's not just about going on to IPO, doing it at the highest price possible and forgetting about it. Then you have a relationship transparently, but actually, you know, real growth story. So that is there as a key. We need to identify the right company, and the idea that the shareholder would be there to also be very clear about regulatory environment where that company operates is also very important. And it has to come up front. You cannot say that we will deal with it later. You have to very clearly say, how is this company going to operate? How it's going to grow? What dividends are they going to pay or not pay, or what's the structure? So this is a huge work that needs to be prepared, but for state-owned companies, this is yet another step to do. And that is helpful, I think, for the development.
Yeah, so the strategy and readiness to deliver. Thank you for your reflections. It is very worthwhile, I would say, to discuss these matters. We have still a couple of minutes and many questions. So one question is, yes, about this regulation. It says it roots in German law. Yes, correct. And the idea is to limit the state participation. Correct. In addition, well, so obviously the question is that the problem is the regulation or its application? It's actually both. It's also the fact that the general strategic purpose of the state-approved strategy is now then verified by the competition board on a legal level, and that goes hand in hand with administrative burden and matters like that. So. I mean, a lot of questions actually coming in on this state regulatory intervention, confirming that this is a hot topic to be resolved. We cannot take them all at the moment, but it is to be resolved, and we need to move on. The question to Rīgas Namu Pārvaldnieks: are you social, semi-social, or commercial company?
I hope it was a rhetoric question. Of course, we are fully commercial, and also our management team is absolutely professional, motivated, and coming from commercial sector. So basically, we are on the road to 2026, and you just be patient. You will be able to get our shares.
What are your plans, purpose for the use of the attracted funds? Going to IPO is great, but there has to be a strategy behind the capital base. Is there one?
Right now we are working on strategy because our current midterm strategy ends at 2026, and right now we are developing the new one. We know and we understand that this question will be asked by investors, what are you going to do? And we will answer, but not yet.
Okay, thank you. I think they deserve a great round of applause, and you were a great audience. Thank you.